What do you think is the true reason and manifestation of this weaker dollar trend, and how long will that last?
I think around the world, I think investors, pools of money are taking a fresh look at the U.S. There have been a number of events over the last couple of weeks, domestic and geopolitical. And I think what you're seeing, you'll notice gold is up, alternative currencies are up. I think there's a little bit of a repositioning here. You'll notice stocks in the U.S. are not down. So people are sticking with their risk positions, but I think are probably buying some tail risk protection, hedging the dollar. I think we saw that in the first half of 2025 also. I think it will run its course. It puts an onus on calming down some of the tail risk, and I think that would help this.
I mean, it is to say that it's to help boost exports, too simplified explanation for what we're seeing here.
Yeah, I think, yes, it is true a weaker dollar boosts exports. However, we have, in the United States, has 39 trillion of debt on its way to 40 trillion plus. And when you have that much debt, I think stability of the currency probably trumps exports. And so I actually think the U.S. is going to want to see a stable dollar and wants to see stability. And they want to be able to sell the long end of the Treasury curve. Stable dollar helps.
I mean, there are concerns, obviously, and there's a lot of noise about it, that this could be the beginning of a multi-year structural correction for the dollar. You don't see that?
I don't know that that's the case, no. I think there's a lot of strengths in the United States in terms of innovation. Very strong year for GDP growth coming, we believe, and a lot of positives. However, people around the world are not, I don't think they're running away from the U.S., but they're managing some of the tail risk and the institutional framework. They're trying to make sure they understand it, and on the margin are taking action to probably hedge the dollar or buy some alternative safe havens. Gold is the most prominent example.
Absolutely. So gold obviously has seen the upside. Do you think 6,000 an ounce is a target? I know you're not the prognosticator of currency or commodity markets, but...
Well, the house view is we could see gold getting into 54, 5,500. I don't think that's an unreasonable view. It's had quite a run here. You may see some retrenchment, but we think stronger gold makes sense.
How do you read what's happening in Japan? Obviously, the yen is a beneficiary of the weaker dollar. It's at 152 and change right now. So there was a lot of chatter about intervention when it approached 160. Yeah. There's, fiscal challenges, obviously, and fiscal stimulus being proposed by the prime minister. But there's been a bond market rout and a lot of turmoil. How do you see this dovetailing with what's happening with the dollar?
So here's the dilemma for Japan, and this is true of a lot of the developed world. Aging population, in Japan's case, shrinking workforce growth because of aging, and very high leverage. And so there isn't at this stage as much capacity or market willingness to go along with more fiscal stimulus. On the other hand, there's things that the central bank would normally do to protect the currency, i.e. raise rates. And I think talking about excess fiscal has sort of had an effect in the market. So I think you'll see that calm, and it will probably need a combination of some fiscal action and probably the central bank taking some action to protect the currency. But I think in between now and the election, I think they just want to calm this. But ultimately, it's a symptom of these structural issues, aging and leverage. This is why productivity growth, with AI being one of the catalysts, is the big upside for many developed countries, including the world. And a lot of the world will be watching how fast you develop AI to improve productivity growth.
How do you read the reports and the speculation that the New York Fed did a rate check at the behest, perhaps, of Treasury to sort of send a signal to the market that there could be coordinated intervention?
So obviously, I've seen the same reports. I think it's in the U.S.'s interest that you don't see the back end of the Japanese bond curve move up, because it will affect the back end of the U.S. Treasury curve. And so I think some rhetorical intervention, at least, doesn't surprise me, because I think it's in all of our interest to see stability. In the kind of environment I talked about, aging and leverage, we're seeing duration challenges around the world, and I think we want to calm that.
Is there a risk, last question on Japan, is there a risk that Japan could start selling off some of its $1.2 trillion in treasuries as a bit of a backstop, as a bit of a way to calm the bond or currency markets? What would that impact be?
I think the bigger issue that Japan, I think, will have to wrestle with is the fundamentals. Lack of workforce growth, maybe bigger guest worker program. They'll probably talk about faster productivity growth initiatives, AI being part of it. I think you've got to get to the fundamentals, which is a little bit of better growth in an aging society with all the government debt. These other things are more on the edges. You probably have to address the fundamentals.
And calm messaging from authorities.
I think so,
yeah,
yes.
Absolutely. Let's talk about the FOMC. We're going to get the decision early morning Hong Kong time tomorrow. Widely believed, as Esther George, we just heard, saying it's time to pause. You agree? Yeah,
I do agree. I think the Fed right now is at neutral. What do I mean neutral? We're at 3.5, 3 3/4. The neutral rate is, I think, 3/4 to 1% real, and then add the inflation rate, 2 3/4. With inflation still running at 2 3/4 and the expectations of stronger GDP growth, i.e., which may help the job market, I don't think they want to move until they see demonstrable evidence that inflation is improving. If they see that this year, they'll move, but they don't want to act until they see it.
Is there disunity, though, among Fed participants? That was the concern. I talked to Patrick Harker, the former Philadelphia Fed president, who essentially said this causes problems. He was quite surprised in the last rate decision in December by that disunity.
I think there's debate and disagreement, and I think that's a good thing. And here's why. When we were at 4, 4 1/4, 4 1/4, 4 1/2, it was easier to go along with cuts to buy labor insurance because we were still the Fed was still restrictive. The reason the tensions got higher is once you're getting to neutral, I think a good part of the group said, I don't want to be at neutral with inflation sticky and, oh, by the way, above target for the last 4 or 5 years. I think you'll see now that they bought the insurance, I think you'll see a pretty good consensus among the group. We don't want to act until we see improvement.
And your views again on Fed independence? Obviously, there's been lots of ramping up of rhetoric coming, whether it's from the DOJ and having the subpoena. Jay Powell stood strong. Of course, he's going to be handing off his position. He could stay on as governor, though. How do you think this plays out?
So let's take it in pieces. In December, a lot of people may not have paid attention to this. The governors voted unanimously to extend the term of all the bank presidents, other than Raphael Bostic, who's retiring. That might have surprised people. Unanimous vote, by the way. Okay, so I think there's more likelihood there'll be stability among the presidents. Then, if the Supreme Court does not allow action on Lisa Cook, you've got 4 seats with Jay Powell's the one that's up for grabs. I think he's likely, I would have thought, not to stay on. And so there'll be 4 seats with the new chair. It means the new chair will push regulatory reform, may have more collaboration with the Treasury on the balance sheet, but on the Fed funds rate, he's not going to have 7 votes wired. He's going to have to persuade, debate, disagree. I think that's a good thing. He'll argue that the Fed should anticipate inflation improvement. The committee will want to see it, and that'll be the debate.